This is the brief on the legal risks facing cryptocurrency sellers in Switzerland. So get this. We're looking at a really scary story about a Swiss entrepreneur. He was charged with fraud and money laundering. And all he did was sell his own tether on a regulated peer-to-peer marketplace to a totally verified buyer. First, it seems prosecutors just don't get how these P2P platforms actually work. See, the accused used Binance, which acts like a strict escrow service. He only released his crypto after the cash landed in his account. And since the buyer had passed all the Know Your Customer checks, everything looked completely above board. The platform doesn't even let them talk directly, so there was literally no way for him to know the money was from some third-party romance scam. Second, there's this huge legal failure when it comes to criminal intent. For fraud in Switzerland, you actually have to intend to commit the crime. But the prosecutors, they just followed the money without asking any experts how these markets function. They pretty much just assumed he was in on it because the funds ended up in his account, totally ignoring that he was just following the platform's rules. And finally, the human cost of this. Well, digital illiteracy, it's just devastating. The accusation itself became the punishment, way before any trial. We're talking arrest, all his personal and business bank accounts frozen, and his company just destroyed. It's a tragic example of how not understanding the tech can absolutely ruin an innocent person's life. This case really shows that when the legal system doesn't get blockchain, it can tear apart a citizen's life before a single piece of evidence is even heard in court. Until justice catches up with technology, participating in the digital economy, well, it remains a dangerous gamble for the innocent.